Okay, guys. Terry, this is your journal, and this is my week analysis for January the 12th, and this is the 15th of January. So we have about, let's say, about a couple minutes left on the candle. I think it actually the market just closed 3 minutes ago. So this is my analysis for the week. I, this is how I thought the market was going to go, TJ. And this is the 12th of January. It's currently 1:30 a.m., so it's about 7:30 in the UK, so we're about 30 minutes before lunch. What I see is that we have come back to this level and we have printed a nice wick. Although it's a bearish candle, it's a nice doji, but the wick on the downside is a lot longer. It's more than 200% of the upside candle. Now, would this prove out to be a three-pin formation? Maybe we have about 14 hours left in this daily candle, and we'll see. On the 4 hour, what we see is that this void here has been filled. This we get was another added confluence. You had the 4 hour level, you had the 4 hour band, and then you had the void here where price just took off without ever visiting and just took off. So price had to push into there. Now, of course, for my entry, I'm actually thinking of a counter trend entry right now. What we can see is that we are now in a bearish trend on the 4 hour at least. Even on the daily, it is bearish. What I can see now is it's due for retracement, possibly to the 1900 level. That would be optimum for me, and I'm looking to write that up there. Why do I choose the 1900 level? If you drop down to the 1 hour, we can see this huge momentum push from here, and this void here is never filled. So the confluences I have is psychological. Okay, so that was my confluence. That was my prediction for gold. And this is actually how gold played out here. Gold played out this way. So this was when I made my analysis, and gold actually never broke above 1864. So that was a nice, that weekly level held strong. So if we go to the weekly on here, you can see that I had that weekly level from this wick right there. And what you can see is that's been a very important level, as you see. 1, 2, 3. So my first trade actually on this pair, because I took two trades this week, and both of them were on were on gold. The first one was on gold. And what was that trade? That was let me just look at it here. That was a buy from 1859. So we drop down to, if we go to these this year, and we 1859. So somewhere here, yeah. This is it. Pretty much right there. So off of that bullish engulfing, I remember this. My stop loss was just tucked up below there, 1853. My psychology was good. I followed my trading plan. Didn't risk too much. Risked according to my plan. 1850, about a 50 pip stop loss. Nothing too crazy right there. And then my take profit was 1900, of course. Well, not 1900. Because of stoppage, I had it at 1896. Let me just get that there. 1896. So this was my trade. This was my first trade of the week. So if we just copy this and bring it over here. If we just copy this and bring it over here, what we can see is, although my analysis was right, I had not yet seen a rejection, because on the daily, yes, this turned out to be a three-pin formation, but that does not mean that just because this is a wick, it doesn't mean price is rejecting. It just means price was simply reaching. It just means that price tested that level and then bounced off it. That was not a clear rejection. Structure overall had not broken yet. What I can see is eventually the price was filled, at least not everything, but it was filled. What does that mean for me? If I wanted to enter this trade, a buy here is not optimum because I'm not protected by anything. Even let's say price continue to go up, price could simply do this. Price could simply do this, and off of that, then trade higher. That just means that it just had a retracement and continued trading higher. I just entered up for one candles. I noticed that this is one thing I struggle with. I enter up one candles. I saw the quick bullish engulfing. I was excited. Like if I just backtest this, you can see I see this bullish engulfing. What I failed to see is that I had this key level just hovering above right there. I did not wait to see how price would react to that. One thing someone told me a long time ago, or not long, when I started trading, is don't buy below a level and don't sell above a level, especially if it's a counter trend trade. And what happened? Price traded up there, but look, it never closed above. Never closed above. And eventually, come US session, hit my stop loss. That was my first trade of the week, and I think that was about $11 loss. And then my second trade of the week actually came on Friday. Came on Friday here, right here. So what had I noticed here? If we go to the 4 hour for this one, what I had noticed is, although we had this inverted head and shoulders or whatever you want to call it. Sorry, let me just mute this because it's actually disturbing me right now. Although I had this higher low, higher high, what I noticed is over Wednesday, Thursday, and Fridays, we broke, I counted this as structure and we broke through it, lower low, lower high, because if you really get into it, you can see lower high, and then we had a lower low. So I was looking at here for potential entry. Then if I translate that, so I was looking at this region right here, because this is really where we came from and never visited again. So I was looking at right there for potential entry. So that's on the 4 hour. If I translate that to the 30-minute, what I could see was during the start of the trading day, so that's Asian session, I think Sydney or Tokyo, one of them, we actually had this nice level here, 1855, nice psychological level. So I had a nice set of confluences lined up, 1855 there. And what did I see? What I clearly saw was we had the first rejection there in Asia. We tapped there, we didn't quite get any volume off it. Off London, we tapped into it. Although there was a bullish 4 hour, we still closed in there. And then I saw this rejection of it and then this continuation. Although there was not yet a break of structure, I felt like the overall structure was to the downside, which is why I took this trade. And what's important for me is although my take profit was here just to be safe, it did make a lower low right there. So the trade actually played out. If we go to the 15-minute, we can see a slight retest, not really, and then the absolute melt. And we did create a lower low. So what I can say is I trusted my analysis. I really I was struggling with missing out on GJ trades, which I'll go over soon. But what I really am proud of here is I trusted my analysis and took the trade, set my stop loss, my risk placement, and just let it run. So this is my first. I noticed that this was a lower high, lower low, I mean, right there. And just get that. A lower low. Nope, sorry. This was a lower low right here. We just go into this one. Lower low. And then we got a lower high right there. And then a lower low. And then we got another lower high right here. You can count all of this here as your lower high, just right there. And then our lower low right here. So although technically off the 4 hour, we are still in a range. If we look at the 4 hour again, we can see that technically we're still in this range. We have been trading lower. And now for GJ, let's look at what my analysis was for GJ over that, what my prediction for GJ was. So let's just come to GJ. Okay, we're still on gold here. I think we just, okay, so this, I think we started GJ about somewhere here. In about 4, okay, so I have set an alert here. For GJ, personally, I thought GJ was going to continue in the range. I thought it was going to continue in the range, but it could be that we are at time when it is looking to break out now. Look at the daily. What do we see? We see a huge wick left to the downside. So what does that mean? It negates this candle because although this candle even closes a bigger body than this one. This one's body is so tiny that it closes within the open and close of this previous candle. And the wick reached into the lows of 140.5, yet the momentum wasn't able to sustain. So we see this huge bullish engulfing candle that came back to this level, huge bullish engulfing candle that brings the price back up. So it does look like we're ready to break, but of course we can't know until we actually break. For me, I have two things on GJ. So I'm looking at the 1 hour mainly, and as you see, I said I'm monitoring and seeing how the 8 o'clock candle, so the London candle closes. Is there momentum? Does it break through this structure? Does it create equal highs? Because although we did form this here, technically we are still in a downtrend market. We broke through all this structure to downtrend market. You can you can choose not to count this and say that this was just one big retracement. Personally, for me on the intraday, I would count that, and I would say this here was a high, lower. Okay, so looking at my analysis on GJ over the on the 12th, I laughed, but not laughed, but I laughed because I actually followed my plan. I didn't take, and I had missed this big move here, and then I looked here to see does it break structure or does it create equal highs? And it did break structure right there. It broke through, but it never gave us that retest we were looking for. And it came up all the way up here, got to 140 point about one. So just 142. We look, that's just where price was pegged at right there. And then price had that huge fake out and closed back below and started trading lower. So we did have something similar. We had mainly profit taken at the psychological level of 142. We really saw price slow down. We look at it here, and then we saw structure change. That was the big thing. So if we go to the 13-minute, of course, we can see that price traded lower, created a lower high. And personally, I was looking to take this down actually to here. But why I did not take this here is mainly because it wasn't in my trading time and I didn't set an alert for it and I was asleep. Then during London session, I I did not want to take it here because I knew that I took a trade in gold the last time and I got trapped in this because let me show you how it looked. This is how it looked for me. It was like this. No, first it was like this. I had two temptations. First, it looked like this. So we broke through this range, this mini intraday range. We had this shooting star, kind of a bullish and bearish engulfing. And I wanted to take that trade. I was so close to pressing the button, take it, and tuck my stop loss above there, and just nice 123.7, not too shabby to end the week. There about just right there. That was what I wanted to do. But I had seen on gold, and it has happened to me so many times where I get trapped here, and then London rollover comes around 10 a.m. in London, price retraces somewhere into the range and then convinces people to buy, and then it absolutely just melts to the downside. Of course, that didn't happen in this case. What actually happened is, if we can see here, I was then ready to take the trade because if you drop down to the 15-minute, a lower low was actually formed, and this was a lower high. I wanted to take the trade, but on the 30-minute, which is my entry candle, I did not take it because right there, as you can see, which is where I should have taken it. The 3-pin formation, why I didn't like it is because it closed back 50% above, which is I don't respect that. I think it closed too weak. The buyers came back too strong, and it did turn out to gradually drop, and it got to that potential take profit, but I did not take that. And another reason why I didn't take that as well is gold and GJ kind of happened at the same time. If you see, I took this at 11 a.m. and gold and GJ, I was stalking it at 11 a.m. So I didn't want to be in two trades at the same time because that's twice my risk, and I know my risk threshold for a per trade, so I did not want to do that. I did not want to put unnecessary pressure on my psychology. But overall, though, I think that this is pretty good for the week. I did struggle a lot with missing the breakout of this range. I found out that missing trades personally has a larger effect on me than losing trades, especially when I see it on the Astro Forex story or something. And that's not me taking other people's trades. That's just me seeing that, oh, this guy caught 180 pips, blah, blah, blah. Not even the money, just the pips. That affects me. And I'm working on that. I'm reading books. I'm telling myself this. So this is my end of the week analysis on January 15th. And yeah, GJ played out, broke out the range, has come back to retest now. The only question is, will it come back further to retest here, or will it bounce from here and continue trading above? Or will it, or is this a change in momentum? Because we want to know this. The 4-hour trend, you can say has changed, or you can say it's still there, but the daily is still bullish. It is still in a bullish uptrend. Slowly but gradually, we are getting up there. So that is my analysis for this week, that my end of week analysis, and thank you for watching. This is quite a bit a long one.